What up, guys? It's your boy Nakamoto Crypto here, and today we got Bitcoin braced for a $1 billion earthquake this week. Now, Bitcoin's early 2020 rally has come to an abrupt halt, with the price falling to hold above the $10,000 mark. The Bitcoin price, up around 30% so far this year, has been traded water at around $9,400 since it briefly moved above the $10,000 level earlier this month. Now, Bitcoin traders and investors are braced for more than 100,000 Bitcoin options totaling to $930 million to expire on June the 26th. Nearly 70% of Bitcoin's entire open interest. Wow. Bitcoin's looming option expiry could spark about a price volatility, with a previous large expiries causing the market to bounce quite aggressively, and the size of the Bitcoin open interest market recently soaring. So Bitcoin futures is expiring, and $1 billion out of our some $200 billion mark could spark a massive dump, according to this article. Now, but though, Bitcoin's open interest has climbed to 1.3 billion, doubling what it was just a couple months ago, according to data from Bitcoin and crypto analytics provider Skill. Debit, a Panama-based derivatives exchange, accounts for 77% of the Bitcoin options market. Although regulated venues CME and LedgerX have gained ground recently. So the split between bullish and bearish options currently fairly neutral, although most of the CME contracts are for the Bitcoin at above its current price, with 75% of the CME contracts calling Bitcoin at $11,000 and higher. On top of Friday's coming Bitcoin options expiry, global stocks have slipped due to a resurgence in the pandemic infections across Europe. So number 19 is on its way back, slowly creeping. Stocks are falling again. The US and China weighing on investors' confidence. The key thing to watch over the next few weeks is the pandemic-related equities sell-offs. Mr. Chris Thomas, head of the digital asset Swissquote Bank, told CoinDesk that if markets react very negatively towards the increase of the number 19 cases, we may see more panic, which could also put Bitcoin lower. Now, this is truth, guys, because in March, when the pandemic was at its peak and cities was at lockdown, the market collapsed a little bit, and we seen a massive dip, even affecting the crypto market. People were selling their Bitcoins and their alternative coins because nobody knew what was going on. There was a big sell-off. Whales were dumping, and the regular investors was also dumping Bitcoin hard. We seen almost a $3,600 BTC. Meanwhile, despite a surge in Bitcoin's options interest, more Bitcoin buyers are treating it as digital gold, preferring to hold Bitcoin for the long term. These are the long-term holders. Now, the data shows that the majority of Bitcoin is held by those who treat it as digital gold. So people still believe in this asset, an asset to be held for the long term, Chainalysis researchers wrote last week. Now, with more people looking to trade Bitcoin, which is only becoming more scarce following the recent halving, Bitcoin moving from the investment bucket into the trading bucket could become more of a crucial source of liquidity. However, one would expect this only would happen if Bitcoin's price rises to a level at which long-term investors are willing to sell. So there it is. Long-term investors are not selling, they're still holding on to their BTC. This coin is incredible. Started 11 years ago and is performing better than stocks. Up 30% already this year. I can't think of any stock in the traditional market that is up 30% already this year. That is the power of crypto. Next, we got the man who predicted the global collapse just warned the rally in stocks is over and the coming global devastation will be unimaginable. There's the guy. Greed is good. That was Mr. Gordon Gekko. So, Egon von Greyes says that there are lies, damned lies, and then there are the economists. Whether these economists work for the government or a bank, they spend all their times on the computer extrapolating current trends with minor adjustments. If you want to understand the future, don't spend your life preparing and constantly revising an Excel sheet with masses of an economic data. Collective human behavior is extremely predictable, but not by spreadsheets analysis, rather by studying history. So according to this guy, history repeats itself. All of these markets, crypto market, traditional markets, they are not controlled by economic data and complicated analysis. They move by human emotion. So the markets get emotional because the people holding gets emotional. History, he says, is a better forecaster than the economist. There is nothing new under the sun. So why is there so much time and money wasted around the world to make economic forecasts that are not better than a random job by a few chimps? Instead, give some lateral thinkers a few history books and let them study the rise and decline of the major empires in history. That will tell them more about the long-term economic forecast than any spreadsheet. So study the Roman Empire, the Greek Empire, the Persian Empire, and a few more great empires. Study their rises and how they economically collapsed. And you would know that history repeats itself according to this guy. He goes on to say that after a 50-year decline of the US economy and the dollar, we still hear about the V-shaped recovery being imminent. On what planet do these people live who believe that a world on the cusp of an economic and social collapse is going to see a miraculous recovery out of the blue? So there is no hope for this market according to this fella. He goes on to say this is the problem with a system which is totally fake and dependent on a constant flow of stimulus checks, people, stimulus checks. Even though it has zero value, most people are fooled and believed that this is real. You are being fed fake money, people. So Lenin, this is a quote that says Lenin was certainly right. There is no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction and does it in a manner which not one man in a million is able to diagnose. That was written by John Maynard Keynes. Wow. So all empires end with a collapsing currency and surging amounts of debts. We've seen this in 2008 with the real estate crisis, and we are now in the final stages of the end game. The end of the end could be extended affairs, or they could be extremely quick. Most declines of major cycles are down, out, and this one has lasted a half a century, guys. 50 years this has lasted. And according to this guy, it is on its last leg. The economy is on its last legs. During that time, the dollar is down 50% against the DM, euro, and 78% versus the Swiss francs, and US debt has gone up 65% since 1971, from a $400 billion debt to a $26 trillion, a collapsing currency and a surging debt is how empires end. He goes on to say, but the end of the end has also been drawn out and started in 2006 with the great financial crisis. The financial system back then was on the verge of a collapse in 2008, but was miraculously rescued with tens of trillions of dollars and printed money and guarantees. Will this happen again after this pandemic takes over? He says central banks have since then frantically kept the party going by manufacturing worthless paper money. The music should have stopped in 2008, but the participants are still dancing on the grave of a system which is about to succumb. The system is about to succumb. The degree of the coming disintegration of the world economy will only be known with certainty by future historians. So we are right now being history. We are right now being recorded. Maybe 50 years from now, historians will talk about us in 2020. What happened and how did the market collapse? This guy predicted it some years ago. He is predicting it again. This is how empires fall. He goes, what is clear though is that we are seeing the end of a major cycle. What we will experience next is not just the fall of a nation, but most of nations on earth, both advanced and developing countries. So both advanced countries and developing countries will have to struggle, because the debt is a global problem that virtually every country is seriously affected by. When the financial system crumbles, so is the world trade. So what will happen next? He says asset bubbles can only end in one or two ways. Either they implode or they explode. The principal bubbles, we are here talking about the financial system, stock markets, bond markets, and property. So in principle, we are looking at two options for this era to end. The net results is always the same, although the explosion finale will be the more violent and lead to a quicker massacre than the implosion. Another quote from Lou Mayhem, the Wall Street guy. He says, Jesus, you can't make a buck in this market. The country is going to hell faster than when that son of a Roosevelt was in charge. Too much cheap money sloshing around the world. He says the worst mistake we ever made was letting Nixon get off the gold standard. So the United States was backed by gold standard, and I believe in the early 1970s, Mr. Nixon took them off the gold standard. Paper money started circulating like crazy, and I think the dollar was backed by oil, and nowadays it's pretty much nothing. Worthless inflation. Explosion. The risk of an explosive end is very high. That would most probably involve an acute problem in the banking system leading to a major banking defaulting, says the Dutch bank. This would spread throughout the whole banking system like wildfire. Obviously, also affect the derivatives bubble of $1.5 trillion. It would happen so quickly that the central banks won't be able to print money fast enough to stop it. In any case, the whole financial world would know at that point that any freshly printed money would be worth zero, guys. So the higher these things go, the more the banking system defaults. And once it defaults, doesn't matter how much money you print, it's pretty much nothing. We've seen that in Venezuela. We've seen that in Zimbabwe. Will it happen in the US? That will be devastating, because the world's currency reserve is the almighty dollar, the almighty USD. Who would have thought on its last leg? According to this economist, that is gonna happen, and this is the direction that we are headed at. An explosive outcome of this 100-year bubble era would clearly be cataclysmic for the world. It would lead to a global deflationary depression of a magnitude never seen before. It would also take life back to a level of devastation and deprivation that would be unimaginable today. The implosion would be the only obvious difference with an implosive outcome is that it would take longer and therefore involve both people and pain. And as a desperate central banks creates trillions and quadrillions of worthless dollars, euros, etc., to on a temporary basis keep the balloons inflated. The dangers of inflation, guys. Even though this process would be more drawn out, it would also fail in the end. First, there would be a brief period, maybe a couple years, of hyperinflation before it would end in a deflationary collapse. And that's where crypto comes in. A Bitcoin, a deflationary monetary system with a fixed supply. Nobody can print more BTC. So these are two options. There is absolutely nothing that can stop it. Well, we always have Deus and Ex Machina, of course. Yes, miracles can always happen, and the world would certainly need one this time. But sadly, the odds are not in favor of these kinds of wonders. There is no savior coming this time. It is either implosion, they print too much to the point where it gets worthless, or implosion. It takes longer for them to recover, like 2008. This time even longer, because back then it was only 400 billion dead. Now you're looking at more than 26 trillion. How are you going to fix that? Mr. Gordon Gekko Wall Street is quoted to say, the point is, ladies and gentlemen, that greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all of its form. Greed for life, for money, for love, knowledge has marked the upward surge in mankind, and greed, you mark my word, will only save Telda paper. But that other malfunctioning corporation called the USA, thank you very much. What a quote. He says what we know so far, that the number 19 pandemic is a convenient excuse but not the cause of the current problems. CV was a catalyst, but the real crisis this time started in August/September 2019 with the Fed and ECB panicking. The real problem is excessive debt at all levels of the economy, sovereign, corporate, financial, and personal. Governments and CBS have created the debt and are now desperately trying to remedy their mistake by doing more of the thing that they created all. As Mr. Einstein said, we cannot solve our problem with the same thinking that we used when we created them. This is Albert Einstein he's quoting right here. Einstein says that we can not solve our problem with the same thinking that we used when we created the problems. How true is that? But CBs have no other tool. Rates are already zero, and making them negative means you would have to pay for lending money to a bankrupt borrower. How do you pay for lending money to a bankrupt borrower? There are clearly more attractive investments, which I will discuss later. Unemployment is currently in the 100s of a million globally. Many people now earn more by not working and would be allergic to having to work for money in the future. Also, a high percentage of lost jobs will not come back in the world. Wow. 46 million Americans, almost 30% of the US workforce, have filed for unemployment claims since the CV started. So ILO, which is International Labor Organization, estimates that almost 50% of the world's labor force, in particular in developing countries, could lose their jobs, guys. This is serious business right here. Businesses, and big or small, are falling. So thousands and thousands of companies are going under in all sectors. Total losses will easily be in the trillions soon. As an example, the whole travel industry is on the verge of a total collapse. Carnival, the cruise businesses, just announced that 4.4 billion loss and the sale of 6 major cruise ships. Airlines and hotels are either going under or losing fortunes. Global tourism is a $5 trillion market, with an indirect support of businesses making a $9.2 trillion contribution to global GDP. Now just imagine, in an industry that represents 11% of global GDP that is hemorrhaging and will not recover in this decade at least. Another example is the Swiss watch party industry, which is more important to the country. It lost 81% of exports in April and 68% in May, guys, compared to 2019, another sector which will never be the same. Bad loans are surging as companies and individuals can neither afford to pay those back with interest or installments. In the US, it is estimated that no payment have been made over 100 million loans, guys. So half of Americans consider selling their houses to survive financially. Most Americans don't have savings to cover more than 2 weeks spending. People in general are bad savers. Global printing presses are working 24/7 to save the world from perishing. Since CV started, the total fiscal monetary stimulus so far is $18 trillion. So the stimulus could easily double, but just $18 trillion is a massive 22.5% of a global GDP. The 6 biggest money manufacturers are: number 1, US, 6.5 trillion. Number 2, the EU, $3 trillion. Number 3, Japan, $2.1 trillion. Number 4, China with $1.2 trillion. And number 5, Italy with $1.1 trillion. Finally, France, number 6, with $0.8 trillion, with just $800 billion. These are all stimulus checks that they have been printing out and giving out for free. There is no such thing as free money. The above list of problems is just an example of global pressures on states, companies, and individuals that either are bankrupt or will collapse under the weight of their own debt in the next few years. At the brink of collapse. Another quote from Lou Mayhem, Wall Street. He says, Bud, I like you. Just remember something. Man looks in the abyss. There is nothing staring back at him. At that moment, man finds his character, and that this is what keeps him out of the abyss. So this is a long article, guys. But to summarize it, you heard it. The world will never be the same after this year. And this is just the beginning. This is the man who predicted the global collapse and just warned the rally in stock is over. You can't keep printing money and bubbling the stock market like they are on steroids. No, sir. One day this will happen. So get yourselves ready, because crypto is here to stay. It just might be your ticket out of this. I'm talking to you, the listener. This is no financial advice. Please do your own research, because crypto is here to stay. Next, we got the Coinbase listing. So Coinbase is listing an Ethereum token, which is now the biggest in the DeFi, decentralized finance space. But are annual yields, earnings coins, a good idea? So in brief, Compound has launched its Comp tokens on Monday. Since then, its price increased by 300% and is now the biggest decentralized finance token by market cap. The price increase has started a debate about yield farming. So interest in Compound Comp has continued to soar over the past 24 hours, sending the value of the asset through the roof and securing its place by market cap as the biggest decentralized finance token. The value of Comp, which went live for trading on Monday, has increased by 80% in one day, surpassing popular Ethereum token Maker as the biggest DeFi cryptocurrency. The price of its Comp is now at $371.68, and its market cap is fast approaching $1 billion according to data from CoinMarketCap. Since launching Monday, its price shot up by 300%. So you would have made 300% gains if you had put some money in Comp. Now, this Comp token was created by developers building an open source financial application. Compound is an algorithmic autonomous interest rate protocol that runs on the Ethereum blockchain. It is the biggest in the space according to DeFi Pulse. 560 million is locked up in the Compound contracts, and Maker, the second largest, has now 477 million. So these are the two major coins in DeFi right now. Compound allows people to vote on governance decisions. Now, Coinbase Pro announced on Thursday that Comp would be available to trade on its platform on Monday. Such announcements have in the past. For those of you who don't know, every time Coinbase announces that they're going to be listing a particular coin, like a hype coin, it surges like crazy. So this is just another history repeating itself right now. So after the most popular cryptocurrency exchange announced the listing of the MakerDAO governance token MKR, its price also quickly increased. The rapid increase of Comp has kicked off a debate about yield farming. When lenders earn interest from borrowers. The creator of Ethereum himself, Vitalik Buterin, tweeted yesterday that decentralized finance should not be about optimizing yield. This is what he said on Twitter. Decentralized finance should not be about optimizing yield. Rather, we should be solidifying and improving a few important core building blocks. Synthetic tokens for fiat and a few other major assets, aka stable coins, oracles, for prediction markets, etc., DEXs and privacy. So he is not agreeing with this right now. Yield farmings. So guys, be extra careful. This is the founder of Ethereum himself warning you about these particular tokens. He said, while another Ethereum developer, Eric Connor, added that yield farming will allow open source projects with a working in-demand product to monetize via token incentives, and called it an important funding experiment. So while he agrees this shouldn't be the end goal, he sees it as an important funding experiment. So this guy is saying, just let it play out right now, even though he does agree with Vitalik that this should not be the focus right now, yield farming. So whether or not earning money from yield farming is a sound long-term strategy for those involved in the DeFi world, early comp investors will surely be happy with their results for now. That is true. 300% gain in a couple days. Which other market gives you these kind of returns right now? And Ethereum in the beginning of 2017 was about $8 and it jumped up to $1,400. People was building on the Ethereum blockchain back then. I remember ICOs after ICOs after ICOs. So this is history repeating itself. People are building DeFis on top of the Ethereum blockchain. All of these tokens, Comp, Maker, people are using this to give out loans, take out loans. And it has been working. It has been growing tremendously. Could this be the spark of another bull run where Ethereum can just shoot up to at least $10,000 per ETH? Is Ethereum undervalued? That is the question of the day. And on that note, if you like the content, guys, please don't forget to leave a like, share, subscribe. Thank you to all of my new subscribers and to all my subs. Thank you. I've been your boy Nakamoto Crypto, and I'm out.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin is over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Best performing asset in the last 10 years. True. Look into crypto, we need volunteers. No need to tiptoe, it won't disappear. Do your research, history made it clear.